Good morning, it's Jonathan Barratt with a special market update. What we've decided to look at in the wake of what's happening in Japan is actually the effects on the energy sector and how the rebuild and also how our minds are going to change as a result of what's happening in Fukushima in respect to the consumption of nuclear power. So we're only going to spend about 10 minutes today. What we're going to do is we're going to discuss the energy sector a little bit, and we're going to discuss primarily natural gas. As we feel that natural gas, the fundamentals and also the technicals seem to be aligning themselves for a good, strong move to the upside. I guess the real reason why we all of a sudden come up with natural gas, it has been a commodity we have been close to, and there is certainly a lot of supply out there. And we actually feel that supply tightness will be consumed, given there's a change in rhetoric about how we treat energy, and particularly as a result of what's happening in Japan. First of all, let's look at what is occurring in Japan. I guess the initial concerns, Japan imports 95% of its energy, and as a result of that, any external factor that contributes to an increase will affect the economy. More importantly, at the moment, we're seeing that, obviously with what's happening with the reactors at Fukushima, that the global community is having a wait-and-see style of policy in terms of whether or not we actually really need nuclear power. And as a result of that, are there any alternatives that we should be looking at? I guess our house view is that we really don't need nuclear power, and given the concerns to the population, particularly in the surrounding areas of Fukushima and Tokyo, that there's certainly some dire consequences as a result of what has occurred there. And I think this will resonate through the global community. As a result of that, I think we will change our rhetoric towards the use of nuclear power, and as a result of there should be some alternative. Now, I think one of the interesting things for me is that the alternatives are out there, but the cleanest and most efficient, and perhaps even some of the safest or most safest, has to do with natural gas, LNG. We do note that that in 2002, when Japan actually turned off 17 of its 54 reactors, that we actually saw a 11% increase in the consumption of natural gas as a result of that. So we actually feel that it's in the system, that this as an alternative natural gas is something that we should be looking at, but particularly in Japan anyway. So let's talk about natural gas. I guess when you look at it, and we're going to discount the fact that China, Russia, Venezuela are all really questioning their nuclear program. Certainly in Australia, we're actually questioning the ability for us to have nuclear power when we have such alternatives, and particularly when we have such an abundant supply of natural gas. And around the world, there is an abundant supply, and that's why we've seen the price of natural gas actually come under enormous amounts of pressure. And in my mind, what has occurred is now a catalyst, which will take time, but it's a catalyst in the way we think towards energy, towards the consumption of nuclear power, and more importantly, the consumption of an alternative. And I think that alternative is natural gas. Oil, as we know, is pretty much controlled, 40% anyway out of the Middle East, and we've got major concerns there. But when we look at the spread of natural gas throughout the world, it's pretty even. So it's an easily tappable resource that we feel will become more in favour as a primary source of energy to produce electricity. And as you can see as we go through that, we're going to look at the various types of investments that people can make, and how they can actually trade the natural gas market, if in fact you believe, like we do, that this is a very important source now of energy. So let's just have a quick look at it, and I'll move myself over there. This is the natural gas market. It's the Henry Hub contract, which is traded in America. And as you can see, the volatility is certainly there. $14, upwards to 13.5. Then we've had this big spike up here at 13, at 15.78. But now we've come right back down, and we're right on these major lows for the commodity. This is a weekly chart, okay? So, you're going back since 2001. And I think if we even go back a little, that's about it. 2000 is the actual limit to our chart. But you can see that we're right at the lower end of the range. Now, for those who are technically minded, now looking at the fundamentals, we know there's a change of rhetoric. But look at the technicals as well, because the technicals are also coming into line, and I love this style of formation. It's a perfect breach, followed by consolidation, nice and orderly, you know, A, B, C, if you like, Elliott wave, and this is wave one of that movement to the top side. This is all to be confirmed on a break through that top side of that trend line, which we see around about 1430 or 430 to 445. So we want to really keep a close eye on that, because if that does occur, then we can see a good move to the top side for natural gas. Let's just now come down to that and look at the daily chart. As you can see, the same trend, that daily chart, you can see that natural gas has been consolidating, and it has come down and it has dropped, you know, since those significant highs, which we've seen, and just the more recent one high we had, which is up around that $13 down to about $4. So in a nutshell, you've pretty much seen close to 75% of the price of natural gas being wiped off its value. So I guess by that, you know, every commodity has its time in the sun, and we feel that natural gas is one of those commodities which is cheap, which is an alternative, and technically it just starts to feel as if we're getting ready for a push to the top side. With all these recommendations, I will readdress situations when the market does go against me. So if we get a break below 370, I will reassess my position on it. It's not a situation where I'll get out. It's a position where I'll reassess. I might lighten the position that I have with a full view that I will go back into it, or I might get out and look for a little bit lower area to get in. So, but those are the points to keep a note of. Obviously 330 is another area which I'll keep a good close eye on if in fact the market comes down to those areas. Okay, so how do we trade natural gas? I guess there are a few ways to actually trade natural gas, and I guess the easier one there is the futures, but it's a pretty large contract. We've also got ETFs. We've got two. One is a little good one called UNG, and another one's a leveraged gas contract. They're ETFs traded overseas. Easily accessed, no problems there whatsoever. Obviously via the trader, the Falcon trader, we can get access to this in some of the charts. Another way of trading it is looking at stocks that are actually involved in it, and then you can get some good leverage, and we'll run through a few of those. So you've got futures, you've got CFDs, you've got options, you've got warrants, you've got funds, and of course you've got stocks. So there's plenty of ways that if you feel that you believe in what we're saying, or that you feel that the rhetoric we've talked about is correct, that you can actually look at the trade into these particular products, because there's a quite range, and this range also depends on how risk averse you are in the market. Let's just have a couple of look at a few of them. I guess the first one here is that natural gas contract. That is the futures contract, and the way we would trade that is quite simple. We just put natural gas in there, and I'll just put, so we can see quickly there, NG, and there you can see all the different contracts which we've got for natural gas, and it's just a matter of just selecting the actual contract you need, and it might be a May contract, and then you can trade it quite readily. It's just a matter of hitting buy or sell. So that's the futures. Very easy there on the natural gas. Remember that the nominal value of one contract is $42,000. The initial margin is $3,500. If you need to know more about futures, then just Google it, futures and how to trade it. They are highly leveraged. Now, another leveraged instrument just so happens to be one of the ETFs, and that ETF there is LNGA. LNGA, there we are, natural gas. And once again, it's quoted in US dollars on the London Exchange, and it's quite cheap, and you can actually go in there and buy it quite readily. I'll just put up the chart there so you can see it. So that's how you trade it very easily on the Falcon Trader. And as you can see, the price of LNGA is very depressed, and we feel that that perhaps is one of the most leveraged stocks you can get yourself into. As you can see, 80 cents, $80 down to about 39 cents. So, you know, that is something to look at. A lot of leverage there, and very easy to trade. Another one to trade is UNG, and that's the one that we've actually traded into. It's a little bit more liquid, and once again, very easy to get involved in it. That's it there. It's traded on ARCA, and it's just a matter of buying and selling. You can see the spread there. That's quite easy. Non-leveraged, this particular one, so it represents a very good exchange-traded fund. Okay, another way you can do it, if you don't like that and you still like the leverage and you don't like futures, you can actually trade natural gas using a CFD. And we obviously offer natural gas CFDs there. There's the one for May there, as you can see. Very simple to have a look at, and you can obviously trade it bid and offer quite easily. Now, so we've mentioned the futures, and also you can trade options on futures as well. You can trade the ETF on ARCA, the leveraged ETF on ETF, but more importantly, you can actually trade stocks as well. And just have a look at some of these stocks, because they do represent some relatively good value if you feel that the natural gas will have a bit of a lift to the top side. The first one we're going to look at is AGL. As you can see, we've had a good bounce here. Easy to rectify it in terms of what it should be buying, and I think you should get a bit of lift. In this terms of this type of trade, your stop is below $13.50, and we can see that actually heading back through that $15 range. Another stock we've looked at is EWC. It's a little bit cheap at 42 cents, but we do like this sort of formation. You can see this formation is quite similar to the actual natural gas charts we've been looking at. So we've got a big movement up there, and obviously a stop below that 35 area. It's pretty safe. Origin Energy is another one, 15.51, and you can see there on the daily chart that we do expect, and you can see there looks like a little bit of a lift there. It's just had a little bit of a bounce as people change their feelings towards natural gas. And of course Santos, which is one of the biggies, that's at 14.95, and as you can see, it's already had significant lift over the last couple of days. But we still believe that given the trend and the rhetoric in natural gas, that we feel it's a trade that will basically be with us for some time. And we think that rhetoric will change. And as a result of that, it's not too late to get some exposure to natural gas in your portfolio. Remember, the Falcon Trader will provide you with all the benefits of being able to account for your positions. It'll also be able to provide you with a benefit of trading whatever style you like, whether you like leverage, you don't like leverage, whether you like funds or you don't like companies. So you've got a whole range of products you can trade. And offline, we also trade access to warrants on that, and we're certainly at the moment long the warrants, and that seems to be doing quite nicely. So there's lots of things to trade with natural gas. As I can see, this is an opportunity where you get the fundamentals and the technicals all lining up. Now, this is a trade that can remain intact for a long time. We've outlined the areas where we'll get some relief in terms of our timing might be off, because timing is perhaps one of the most crucial things. But at the moment, it all feels as if the rhetoric is with us, the technical analysis is with us, so therefore it's a trade that we should be looking at, and we should be slowly getting into it. So really, have a look, download a demo at www.falcontrader.com.au. Remember, with the Falcon, you get access to the trading via the desktop, the web, and your mobile. You can even put alerts in it. So it's a pretty usable, friendly trading platform. And as you can see, we've used it throughout all our examples here today. So if you need anything, feel free to give us a call at Commodity Broking Services. Download a demo for the Falcon so you can see how natural gas is traded. And by luck, we can see natural gas continuing to trade up. And I think in retrospect, where do we think natural gas can actually go? And I guess this is the summary point. Well, if it takes out this old high here, there's nothing stopping it going to $6, then $8. And in my mind, that's the target that we've got over the next 12 months. Well, that's about it from me. I hope you find the trade useful. And if you've got any questions that relate to it, just feel free to give us a call. It's jb@commoditybroking.com.au. It's jb@commoditybroking.com.au. Or just call us on the toll-free number, 1300 660 734, 1300 660 734, and Broker will be able to help you and assist you if you have that feeling on natural gas like we do. So that's about it from me. Have a great day, and we'll talk to you soon.